Hello and welcome to this short video explaining what a hard Brexit could mean for several markets. So first off, we'll start with the pound. Before we go any further, I'd just like to clarify what I mean by a hard Brexit. A hard Brexit would entail a no-deal situation when the UK left the EU, and this could be seen as having a negative impact on the pound. Longer term, this may be positive for the pound, although some people also think it could be negative. But in the short term, it would almost certainly be negative due to the uncertainty that would follow. So going back now on the pound US dollar in the daily chart to June 2016, you can see when we had a Brexit vote here, we had this major drop around 12%. What I want to talk about is not just the decline itself, but what happened before it and what happened after it. You can see we had quite a strong push to the upside in the 7 or 8 days before it. The market rallied for around 140, up to those highs at 150. So a 1,000 pip rally in not many days at all, based on the assumption that Remain would win according to what the polls were saying at the time. Now this rally was in part why we got such a big drop when there was the shock outcome. And you can see after that, we dropped, like I say, around 1,800 pips or 12% on the day. And then the market consolidated for a matter of weeks and months afterwards. However, not long after that, we did break below previous lows around 128. You can see we got another flush lower with this drop in the October flash crash, and we also made the final low around the 120 handle in the start of 2017. Just talking and bringing us up to date since then, you can see I've drawn a Fib retracement from these highs to those lows in January 2017, and the market recovered really throughout a lot of last year and the start of this year, making highs around 143, 144, which is the 78.6% Fib of this decline. But in recent months, the market has turned lower once more as the pound's come under pressure and also the US dollar has risen. We fell back lower and made a low here around 23.6. Fib at 126.90, and we currently sit between here and the 38.2, which is 130, 135. Now if we do get a hard Brexit and the market does react negatively and we see another drop in the pound, then we could easily drop down below this 23.6 and possibly even take out these lows around 119.72. A 12 or 10% drop even from here would see us move down to the mid-1 levels. So there is plenty of potential for downside if the market does react negatively. Turning our attention to another cross, the pound Japanese yen, you can see here we had an even bigger drop on the Brexit vote. We got a decline of 17%. Now the reason for this is twofold. On the one hand, the pound's obviously negatively impacted from the outcome as we saw selling in sterling. But also the Japanese yen rose. Now the yen can be seen as a safe haven currency in times of panic or uncertainty. You often see money flowing into the Japanese yen, and this can make it appreciate and move higher. So a combination of this made an even larger move. So we had a 17% drop in percentage terms, but if you look at nominal terms, we actually fell from around 160 to 133 on the day. So that's a drop of 2,700 pips, 50% bigger really than the 1,800 pip drop we saw in the pound US dollar. The third FX pair I want to talk about is Euro Pound. You can see here, obviously Brexit implications can have an impact on both the euro and the pound, but judging from the market reaction so far, the pound seems to be the most sensitive, especially when it comes to negative developments. You can see we had this strong move higher in the euro pound, which is obviously pound weakness. On the Brexit vote itself, these are now weekly candlesticks, and the market continued higher, making highs just around 0.93 a matter of months later. We got some positive euro news at the start of last year with Macron's French election victory. We had another push higher as a single currency rallied across the board really, not just euro pound. We made this new high here at 0.93. But you can see since then, the last year, we've been in quite a narrow range. Just recently, we got this bearish engulfing candlestick on the weekly, which could be seen as a positive negative signal. And we do look on course for a third successive week of lower highs, lower lows, and also lower closes at the time of speaking. If we do get negative outcome and some sort of hard Brexit and we see another push lower in the pound, then this market could rally up to the 0.93 level and potentially even higher. Now turning our attention to indices, you can see here I've got the UK 100 cash. Going back to the Brexit vote, we have this large gap lower and a drop of around 10%. Now back then when we offered this instrument, it traded from 7 AM till 9 PM at night, so it's closed overnight. But I'm pleased to tell you now this runs pretty much 24 hours a day. It closes just for 1 hour from 11 at midnight. So the gap risk is greatly reduced if you are trading this. Now what we saw happen in indices was particularly interesting. We saw the drop in the initial panic when there was pandemonium and everyone's trying to figure out what's happening. But because a large part of UK 100 companies' revenues, somewhere around 70–75%, come from abroad, the drop in the pound actually acted as a natural buffer. So what you saw was after this initial drop, even the next candlestick had a large daily gain from where it opened, and within a matter of 4 days, the losses have been entirely recouped, and carrying on from that, the market actually rallied going forward. You can see this a little bit more clearly if I just overlay a chart of the pound US dollar, so use this compare charts function here. Now if you look on the right hand side of your screen, you can see the pound US dollar on this left axis. On the right axis is the UK 100. Now it's an inverse relationship between the pound and the UK 100 that I want to talk about here, and you can see here after that initial drop where they both moved in tandem, you can see that we had the pound US dollar, which is now these blue candlesticks, I beg your pardon. As it depreciated and fell lower, this is represented by going higher on this chart, and you can see the UK 100 moved higher again. We had a big divergence here around the October time, but the UK 100 caught up and had a strong run into year end. So whilst the hard Brexit may be negative for the UK 100 if we do get panic in the near term, longer term, the downside probably won't be as great as that you see for the pound if the pound does drop strongly, because that would cushion the blow somewhat. Just bringing us a little bit more to present. So today when I'm speaking is Wednesday the 12th of September. This is now an hourly chart of the pound US dollar, and I just want to show 4 events that have happened in recent weeks. Comments really from both sides and the impact that that's had on sterling. You can see we got some positive buying comments the end of last month. A strong move to the upside. This candle here in the hour, we saw a rally of over 100 pips, then follow through to the upside. Over the following weekend, there's some negative comments to do with European automakers having to use less UK parts after Brexit. You can see we had this gap low of around 50 pips, and then the market continued down for several candles after that. We got some positive news. Germany and the UK said they were to drop key Brexit demand. Sorry, that's a typo there on the UK. We got a strong move to the upside, around 160 pips, and then more recently, just a couple of days ago, Barnier said a Brexit deal was realistic in the next 6 to 8 weeks' time. Again, we got another strong move to the upside. Now, dates going forward to look out for. There's a European Council meeting next month, which is October, but there has been some talk, particularly in the last couple of days, of possibly a mid-November Brexit summit. Now, if this does occur, it's likely to be a positive development for both sides if they do announce that a summit date has been arranged, because I don't think they'd arrange a summit simply to announce no deal or hard Brexit. So that could be seen as a positive to the upside. But given that we've had these positive news lately, you can see 3 occasions really where we've had strong moves higher. If we do get some negativity and people talking that we're more likely to go back towards a possible hard Brexit, then we could see some downside going forward. Okay, thanks for listening, and best of luck if you're trading this in the coming weeks and months.